Okay, welcome back to video number 3 in the business breakdown Adobe. We have covered to date the business model of Adobe and the fundamentals looking at the income statement, cash flow, and balance sheet. If you haven't watched those, go back and watch those because really the only thing we've done so far is build the foundation of understanding of the business that we're going to start to increasingly use to predict what might happen going forward. So today we're going to be looking at the business analysis, and really this is a moat analysis. We're going to be trying to understand the ways that Adobe competes and continues to hold their position in the market despite increasing competition over the last few years from Canva and Figma and obviously AI. Before we get into this, this is not financial advice. This is me sharing my learnings as I try to understand Adobe as a business. I'm a CPA and senior financial analyst. I really enjoy doing this from a learning perspective, but I should also say that I do own some Adobe stock because I like to own a little bit of the business before doing the analysis because I think it just sort of changes my emotional perspective of me analyzing it. All of this research was done when the stock price was between $240 and $220. When you're watching this, not only might the price be different, but the entire business landscape might be different as well. So take this video for what it is. It's a starting point and a foundation for your own understanding and your own research, and it is just a snapshot in time. Without further ado, let's just jump into this. So there are really 5 features that a business can have that act as a moat and allow it to hold an enduring competitive position in the marketplace. So we're going to look at each one: pricing power, switching costs, network effects, intangible assets, and cost advantages. And then we'll do a little bit of a summary at the end to just recap everything. I think this is going to be a pretty long video. Okay, so let's first look at pricing power. Pricing power is really the ability for Adobe to set its own price and increase its price in order to grow revenue and to maintain margins against rising costs. If Adobe was really under pressure from competitors and from AI, and they decided to increase their price, we would expect to see revenues falling, users leaving, or acquisition rates slowing down. Or they would need to reduce their price in order to stay competitive, and therefore the margin might drop as well as the revenue. So what we have to go off in 2025 is in the last couple of years, Adobe has twice, at least from my research, increased its price without any real major hit to the stock price. The price of Creative Cloud in 2022 was increased, and this was applied to all individual subscriptions by $2 or $3 per month. So not a huge increase, but some users might have been put off by that. Team subscriptions were also increased by $2 to $5 per month, depending on the license and plan. And then enterprise pricing is like negotiated, and basically we don't know what happened. And then again in 2025, they increased prices again. We can see here that this person was not very happy about it, and probably quite a few users felt the same way. This was again related to Creative Cloud, where the monthly price was increased to $100 per month. If you're on the annual plan, it was to $70, and then the annual prepaid was like $800 a year or whatever. Apparently, according to this article, it was a 17% increase for the monthly subscription and then 18% for the annual prepaid plans. So again, if we just look at the revenue growth rates for those years, in 2022, the revenue growth rate did fall from 2021, but then it basically just stayed stable and gross margins were barely affected, and same with operating income. This decrease here might also have just been due to other circumstances around COVID. I don't really know. I'm more interested in the 2025 increase, which we can see from this article again, seemed to happen pretty early in the year, and revenue growth rates weren't really hit that hard. And at the same time, the gross margin and operating margin stayed more or less flat. We know from one of the previous videos that there's some one-time expenses wrapped into analyzing this pure operating profit, but we do also know that more or less it stayed flat. There's not really any impact, and you would say that they have demonstrated pricing power even in 2025 when AI tools are abundant, but that also doesn't necessarily mean that as AI tools, which seem to get better every quarter, isn't going to impact them in the future. So the question is really, are they going to maintain this pricing power going forward? And I think to do that, we kind of have to look more at some of the other moats, because pricing power is a little bit more of a consequence of being the leader, which kind of comes from some of the other moats. Okay, so number 2, we're looking at switching costs. Like a lot of software and SaaS businesses, switching costs have historically been Adobe's strongest and most durable moat source. And there are a few elements to this. So we looked at this in one of the previous videos, but I think it's worth coming back to here. And that is the workflow embeddedness that comes from Adobe's flywheel. So really what happens is that in creative professions, students learn the trade on Adobe software. An analysis I've come back to a lot when I'm trying to understand Adobe is comparing my training and doing my work on Excel. There's basically no scenario where I would accept losing Excel from a professional standpoint, regardless of whether or not it's Google Sheets or AI or something. I need it to be in Excel because that is how I work and how I function, and I cannot work without it for the most part. So I imagine it's a similar experience for creative professionals. So those students graduate and enter the workforce expecting employers to use Adobe, and then when they're working on the job, they build projects on the Adobe file system. Those are shareable between different businesses and marketing agencies and departments within one company, and they create templates and workflows and automations that they use on a regular basis and come back to. Because everyone gets trained on and uses Adobe for work, those file formats become industry standard and then are expected to be used by every professional. And then because of that, students have to learn on Adobe software, and the circle just sort of repeats indefinitely, or at least Adobe would like it to be indefinitely, and they can maintain their status as the industry leader and then get that pricing power that we just sort of talked about. Basically, Adobe proficiency is considered table stakes for creative professionals, not just at corporate marketing roles, but also designers, photographers, etc. The files need to be passed from one person to another and then opened in Adobe software. And I think what's important here to recognize is that it's not reasonable for any one creative pro to just decide that they want to leave the Adobe ecosystem and use another tool that's cheaper, because again, they're expected to provide their deliverables in Adobe file formats. So everyone would sort of have to change at the same time, or a few major players would have to change in order for like the ecosystem to evolve. And as long as students are learning Adobe in school, Adobe will retain the next generation of designers. So this is a super key point that we're going to keep coming back to as well. I think as an alternative measure, which basically means like a metric not everyone is necessarily going to be looking at, monitoring the software requirements for school curriculums is really, really important. As long as they keep mentioning Adobe and teaching students on Adobe, Adobe will maintain those high switching costs, and this flywheel will continue to work. So I actually went ahead and did that for my research. So I'm really not an expert here, I'll just be honest, but I tried to identify some sort of trendsetter schools that set the standard for other design schools that follow after it. One that came up repeatedly was the Rhode Island School of Design. So this is for their film, animation, and video students, but they maintain Apple workspaces with Adobe Production Suite, as well as like some other tools here. So they're still using Adobe products. Parsons School of Design was another one that I looked at. So this is for a single course on digital video production, but we can also see here that they use Adobe Premiere. So they're still teaching Adobe in school, even though AI exists. They also have it under their essential software, Adobe Creative Cloud. I guess they require their students to have it, and they provide deals and discounts on that for some students and faculty. And then I also looked at a European school because Adobe is a global business. So this is a famous design school in Milan. Obviously, I don't think my audience is Italian and can read this, but I've translated it in Claude. I think what's really interesting here is that they basically conducted a survey on their students. And what this is basically saying is that Adobe is a non-negotiable, and open source platforms are an extension or a supplement to Adobe products, but that they need to do a better job of providing Adobe licenses to their students. So I thought this one was like probably the most interesting here. It's not just a course that requires Adobe. This is literally a school saying that we don't want our students primarily using something else. They need to be learning on Adobe, and then they can use whatever else as a supplement if they want to. So this is all just to say that this flywheel, I think, is still intact as of 2026. The other thing we touched on, but is probably worth just focusing on quickly, is the file format lock-in. So the file formats, Photoshop, Illustrator, InDesign, and actually the PDF, which I think a lot of people don't know, are proprietary software formats and then the industry standard. PDF is actually open now, but Acrobat maintains a lot of power over what you can do with a PDF, and then you can do a little bit more things in their software. So again, switching requires basically everyone to switch, and that is basically just like impossible to organize. And you know, I think a lot of professionals probably don't want to switch. I know that a lot of people have negative feelings towards Adobe, but at the end of the day, if that's the software that you learned your craft on and you're comfortable in, I don't think you really do want to switch. It's just not worth giving up the things that you've built over the years and decades, as well as the time sink of having to learn a new software. And then finally, we'll just talk about the switching costs of Experience Cloud, because remember, that is still like 30% of the business basically. And I think most people know just through a general SaaS understanding that enterprise software is a lot more complicated than pure creative apps. And this is a full end-to-end marketing campaign management system, including content creation, workflow automations, performance analytics, reporting, etc. It's like a full suite of management software. And it's also the system of record for a lot of customer data. It's multi-year custom scoped IT implemented projects that cost a lot of money and a lot of time. And ripping that out of an organization for something new is most of the time not worth it, even if there are cheaper AI coded alternatives or whatever. Okay, network effects. Now, just so that we're all on the same page, a network effect is when your product becomes more valuable by having more users. Now, Adobe doesn't have pure network effects in the way you might think about Meta or like Amazon or some other sort of marketplace, but there are some sort of second order network effects. I think the first we've already looked at, but again, Adobe has that file format and is the community standard. And for a professional to walk away is sort of leaving that network. The network of Adobe file users is more valuable because more professionals are using those file formats, so to speak. So, you know, if you leave, it would be pretty hard to like get a job on something else or work with other contractors for like a few $100s a year that you spend on Adobe software. Firefly is like an interesting one. So this is their image generation AI product. And I think what's really important to note about it is that they've developed the Firefly family of models to be commercially safe. And basically that means that it's not going to be like infringing on copyright or intellectual property products, which to my knowledge, no other leading image generation AI tool can claim. Now, this is ongoing in terms of how important it is. So Disney, for example, is currently suing Midjourney because they allege that Midjourney was, unlawfully training their AI on Disney-owned IP. It's unresolved whether or not this is going to be important. If it turns out that the courts deem AI-generated outputs as not copyright, this doesn't matter, it's dead on arrival. But if they do, this would be a genuine moat for Adobe because they have this huge stock image library that they've been able to train their AI on, and therefore it's safe for enterprises to use to generate advertising content if they want to. The question for me is really if Adobe has enough content and enough compute to train a model that is competitive but also commercially safe. So this is what Firefly can produce when I ask for vanilla ice cream, which is like okay. I don't really think this is like commercially viable to like use as an advertisement. And then this is like Nano Banana Pro, which is, I would say, just like way better. I don't know if it's perfect. Like I think this font here isn't great. I mean, it's pretty good, but I don't know. I'm not a designer. I think this looks way better than Firefly. So I think even if that commercial lawsuit gets resolved in Adobe's favor, I would say they still need to be able to improve their model to the point where it's like usable for advertising content. That's a question outstanding. The theoretical flywheel here would be that enterprises use Firefly because it's legally safe. That usage data gets used to train the subsequent Firefly models. They can accumulate more commercially safe AI data than any competitor, and they have a head start. And then they get like the best commercially safe model, and enterprises continue to use it. And then that would continue indefinitely, hopefully, for Adobe. This would be a true network effect because their product is getting better as more and more enterprise customers onboard and then use the product. So where this falls apart is, again, where the legal action resolves on the side of all AI generations being commercially safe. Then Adobe's advantage basically doesn't matter. And then the other side of it is that they're not able to get to that competitive standpoint. What I think about here is that Adobe does make a lot of money, but they don't have hyperscaler resources to invest in compute or AI talent that they might need to make it super competitive. Like you'll see even now, this is Adobe's Firefly landing page, and they're integrating with other AI products. So you can generate the image using Gemini and then, do your edits using Adobe's products. And then they're also doing this with video as well. They're partnering with Runway because I think they're basically admitting that they don't have the resources right now to get their models to a competitive standpoint. And I think that's pretty important. At the same time, if we go back to the income statement and look at it over time, their R&D costs are progressively increasing. And this is presumably because they're spending money to train these AI models and make them better, which in theory should eventually trickle down to the bottom line and affect their margins if they have to continue to do this to stay competitive. So that's an ongoing thing that I want to monitor as we go forward. And then really, if they're doing this and it's not working out, they would be effectively burning cash on uncompetitive products while compressing their margin on fees that they have to pay to some of these AI providers that they're partnering with. So we're going to discuss this a little bit more in the cost advantages section, but I feel like on this front, it's either like weak network effects or there's like potential for it, but I also think that there's like quite a lot of risks that come with them building that network effect. Quick note on intangible assets here. This is like typically my least favorite moat advantage because it's kind of like just hard to quantify and understand. And a lot of intangible assets are like IP that's registered in like one country or many countries, but not all of them. So, the like famous example would be that like China is sort of just able to copy a lot of their stuff without caring about copyright protection or whatnot. Overall, Adobe is a really strong brand. It's probably one of the most recognizable software brands globally, and to Photoshop something is the verb itself. That probably contributes like a little bit to their pricing power, and it probably also contributes to talent recruitment as people want to have Adobe on their resume. Looks good and they'd want to work there. So that might benefit them in terms of attracting like AI talent if they need it, but there's so much money in the industry right now. I think most AI talent wants to work at like Google, Anthropic, or OpenAI. In terms of patents and proprietary data, I think a lot of people don't know this, but a lot of the tools in Photoshop and Illustrator, et cetera, are like patented techniques for adjusting like the lighting in an image and stuff like that. They also have some AI related ones. This is just something I pulled up from 2023. Some like deep learning patent that was granted for in-painting on high resolution images. This increasing R&D spend that we talked about like should in theory increase this. That being said, again, I just don't feel that intangible assets are like the best type of moat to have, and I don't know if I put a whole lot of weight in them having this. Okay, so cost advantages are the last moat subject that we're going to talk about, and I think it's one of the more interesting ones. Adobe doesn't really compete on cost, but depending on how you see it, the AI debate could either bring real headwinds or real tailwinds based on sort of what happens and how you want to frame it. The business is basically entirely variable, so The cloud model, where they sort of rent compute from Microsoft or Amazon, basically removes the need for them to build data centers. Apparently they actually have one, but I'm not 100% sure on that. They don't have to build factories. They don't have distribution investments like vehicles or other PPE like storage facilities and stuff like that. And that basically gives them like a ton of flexibility in allocating capital either to R&D, marketing and sales, or returning their cash to their shareholders, which they tend to do via buybacks. I think this chart is quite interesting to look at. So this is revenue compared to capital expenditure, which is basically like fractional. This is like the beauty of SaaS, I guess. And yeah, for the most part, it's actually even decreasing over time while revenue is obviously increasing. So if we do go and we look at the financial statements from FY25, this will give us a little bit more insight into their gross margin and where their pure play costs come into picture. So really, this subscription revenue here, that is essentially everything really material. And then they describe it down here that this is really just third-party hosting services, data center costs, and AI inference costs. So I think there are sort of two interesting discussions here, like I hinted at. I think first and foremost, in the short term, I would expect this cost to rise industry-wide as AI demand consumes the data center resources that are available. I imagine most of us have heard about like the massive AI build out that's happening right now. And that's happening because there's so much demand for compute. And when there's a lot of demand for compute and you don't own that compute like Adobe, the price goes up. So we can actually see here, which I think is pretty interesting, their subscription cost of revenue increased by 13% in FY25. And if we look at the breakdown of that they provide in the financial statements, 8% of that 13% is coming from basically cloud hosting services. But if we go forward a little bit and we look at Q1 from FY26, those same costs increased 14%. So like almost a doubling. Now, I think what's really interesting here is that you don't notice that in their gross margin, because here the total impact was 13%. And here in Q1, I mean, it's up 14%, but you also have this negative 8% coming from the amortization of intangibles, which is a non-cash measure. So really their gross margins should be contracting quite significantly because of this increase in data center costs. And that is a real concern, I think, if you're analyzing this business thinking to invest in it. And really, I think this is like a signal of what's to come. I think we're nowhere near the peak of what this cost will become. And then as Adobe tries to compete with other AI products, they're going to be using more and more AI inference costs, which will also have an impact on the margin. So sort of the base rate of the cost is coming up, and then their usage of it is going up as well. So it's going to take up a further proportion of that total cost. And I would expect this to hurt their margin going forward by quite a bit. We don't really have a lot of clarity here, I think, in terms of like exactly how this is going to work out, but it's pretty important and something I'd want to keep in mind. But I also think, interestingly, long term, it might even fall. You know, if you look at the hyperscalers and their capital expenditure year over year, this is Microsoft, Amazon, and Google, their capital expenditure growth is like enormous. And this is just 1 year, and they're saying that they're going to be spending even more. So it's TBD. It depends on if AI demand is really able to meet this increase in supply. But if it's not, for example, if there is a lot of innovation in AI algorithms and the inference cost is able to come down by 10x or 100x or 1000x, we might actually see like an overspend on building out AI compute, in which case the hyperscalers will have an oversupply. They'll have to compete against each other, and the price might actually come down. Adobe would have an advantage in that case. So I'm not an expert in this. I'm probably not qualified to guess on if this is going to happen. But again, I think this is sort of like an interesting dynamic where short term, it's not great, but long term, there is like some opportunity there depending on how you see it. And then finally, we can just think about their acquisition costs and the operating leverage. This is again quite standard for software, but it really costs them nothing to serve each incremental customer because the software is already written and they don't have to re-win each customer either. It just auto renews and they get your money, which is great for them. So that is the assessment of all 5 moats and where Adobe currently sits within them. Let's just summarize here. Adobe has a legit moat and has demonstrated pricing power in the past at the professional and enterprise level. There is some light network effects on the file usage, and there's potential to build network effects in the Firefly model, but it really depends on like how these legal cases outside of Adobe's control works out, and then also their internal ability to make those commercially safe AI models competitive from a quality output standpoint. The cloud and subscription business is like famously great for cost advantages, but I think they are facing a scenario with real margin pressure that isn't necessarily publicly talked about yet. Those compute costs are going to keep rising as AI demand scales, unless we see some sort of innovation or the AI build out happens faster than everyone expects, which allows the supply to reach an oversupplied state and those costs to come down. If the other moats hold in terms of them having those switching costs and that pricing power, it may not be an issue that those compute costs come up because they can raise their prices without losing their customers and maintain those margins and therefore that cash flow. But again, there's risks. So that is part 3 of our business breakdown on Adobe. So far, we've understood the business model. We've looked at the historical financials and some valuation metrics. And then we've now looked at the moat and understanding how Adobe competes in the marketplace. In the next video, we're gonna start to look forward. Everything we've looked at so far is more or less historical. And while that's great for understanding, looking forward is basically all that matters. So we're gonna look at some of the threats, some of the opportunities that come with AI. And in videos after that, we're gonna look at the management team and who's in charge, who's gonna be able to use what Adobe has, navigate those threats and those opportunities, and do we feel like that is the right team to do so? And then in the end, we're gonna look at Adobe's current valuation, what's sort of baked into it, and some key questions that we would need to resolve in order to feel like we agree with it or not. If you're interested in that, please subscribe. If you found this video useful, please give it a like. And if you haven't watched the first 2, I definitely recommend doing that because what I've talked about here is probably not that useful for you unless you have the background that we discussed in those videos as well. So check that out and thank you for watching.